it does seem like what you're getting at is, look, there are some other ways that the Trump administration might be using these tools to impact the dollar, which clearly matters a shit ton for Bitcoin and crypto.
Well, if you follow the logic that I just walked through, he doesn't want to cut rates just yet. He thinks they need to go down ultimately, but I do think looking through this, there is a very strong bull case to be made.
Welcome everybody into another episode of Coinage as we are digging through all the wild moves post Trump's big tariff and trade war sparked some pretty big sell-offs. Obviously, ETH down by about 25% after those headlines crossed the wire, and to a lesser extent, moves by Bitcoin to the downside. And so to navigate all of that with us, very happy to have back on the show today, Sean Farrell, the head of digital asset strategy at Fundstrat. Sean, good to see you, man. Thanks for coming back on.
Zach, always a pleasure. Thanks for having me.
Yeah, and as we always say, you're spot on when it comes to predicting some of these moves, where Bitcoin will be by the end of the year. But of course, as you always caution, there is some chop in between your price targets and where we're at today and kicking off the year, really at the beginning of 2025. And so would love to get your take just for starters in terms of table setting, because as we said just in January, I think it's 175 or somewhere close to that you have for year-end price target. And obviously below 100K right now when we look at the charts on Bitcoin's price. And so just kind of want to get your take on what you're seeing out there in the market now.
Yeah, so coming into this year, we were pretty bullish. We had just been coming off some decent chop. A lot of that chop was due to, starting in mid-December, was due to concerns around tariffs. We saw upward pressure in yields in the dollar, and that was putting some downward pressure on crypto prices. In our view was that, we also had some hotter than expected CPI prints, and the Fed was turning marginally more hawkish. And that goes part and parcel with the tariff fears, I think. And coming into this year, our view was, hey, a lot of this concern is priced into the dollar. A lot of this concern is already priced into the 10-year. I think people are overestimating the extent to which Trump is going to go with these tariffs to use as a bargaining chip in negotiations to reduce the trade deficit. But obviously, as new information comes in, we need to adjust our priors. And it is clear that the market was not anticipating what happened last week. Obviously we had Trump surprise announce 25% tariffs on Mexico, Canada, 10% on China, and there has been a slew of things to happen since then. There's still this sort of Damocles hanging over the market because we only have a 30-day delay on the Mexican and Canadian tariffs. In addition to that, there's been no resolution on the China front, and also we know he's probably going to tariff the EU at some point. So, broadly speaking, I don't think we're out of the water as it pertains to a lot of these tariff concerns. And the reason why tariffs are bad for crypto in the short run is that it whether this materializes or not, it leads to this quasi-stagflationary pricing in which people anticipate inflation taking a step function higher and, real growth slowing, which is a regime in which crypto generally doesn't do well. And so I think in the near term, we have our head on a swivel. We put out a note last night, advising clients to perhaps raise some cash on any balance here until we get more clarity around the path of tariffs. But, I do think looking through this, there is a very strong bull case to be made. We can get into that later, but that is kind of our core views right now.
Yeah, I think, look, anytime it's like, hey, look, some of this changes, I think good traders, good investors always revisit some of the, hey, where were we right, where were we wrong, at least in the short term. And it does seem like, there is a larger strategy at play. And we can get into the larger strategy at play in terms of longer term, give it a few months to talk about what Trump might be doing, because there have been, as you flagged in your note last night too, a lot of interesting research from those economic advisors kind of leading some of the new strategy and using tariffs as a negotiation tactic that is not par for the course in American history, to use American tariffs like this in these negotiations to really bend the knee of certainly our neighbors, but also kind of other trading partners around the world. So we know Trump likes to use these tools. But I just kind of want to start with maybe a smoother brain take here, Sean, because people talk about the Bitcoin reserve and whether or not that's happening. People like to talk about some of the shenanigans that might be afoot when it comes to, hey, I thought we wanted a Bitcoin reserve. Why is Ripple and why are some of these other digital assets sneaking in on there? Just want to play a little bit of what we heard from David Sachs in the press conference yesterday, which I do think, by the way, one of those other metrics that you watch is all about stablecoins, all about the idea of getting some regulatory clarity. I don't want to necessarily overlook that for reasons to be bullish too, because you had Senator Tim Scott chair the Senate Banking Committee saying that he wants to have some of this stuff done within the first 100 days. But just want to play what we heard from crypto and AI czar David Sachs talking about a potential Bitcoin strategic reserve. Here's what he said yesterday, and we'll get your take on the other side. Take a listen.
One of the things that the president instructed us to do was to evaluate the idea for a Bitcoin reserve, and so that is one of the things. That's one of the first things we're going to look at as part of the internal working group in the administration. So as soon as we get all that set up, we're still waiting for some cabinet secretaries who are on the working group to get confirmed. So we're still in the very early stages of this, but that's one of the first things we're going to look at is the feasibility of a Bitcoin reserve.
So looking at the feasibility of a Bitcoin reserve there, Sean, but obviously, it's going to take some time. It's going to take, I think, it's going to take months probably in terms of getting some clarity there. And so what do you make of that, and kind of what's the takeaway for people who are using that as the reason why they're bullish?
Yeah, no, that's the other element that I didn't really discuss at the intro, but you hit the nail on the head. I think the ball has been passed to the government, and the government, despite its, it seems to have a higher proclivity towards operating efficiently, at least this administration does. But even so, it still does not operate at the pace that, investors and more short-term traders probably wanted to operate. And so, their element for our relative risk aversion right now is that, I don't think we're going to get real movement on the SBR or any news around it. Until we get closer to that deadline that the White House working group has been given, which is, I think, 180 days since the signing of that executive order. And, so that kind of takes, the good news, upside headline risk off the table in the near term. And in addition to that,
it is pretty crazy.
It's still unclear.
I'm looking at this chart, Sean. It's like, I don't know. I didn't realize that people had such high odds, basically like coin flip just a few days ago, around a Bitcoin reserve in the first 100 days. And now look at that, just a 14% chance on Polymarket. It's a pretty wild swing.
Yeah, I don't, we were pretty adamant that this would not happen, especially not in the first 100 days. If you look at what settles that market, I think it only counts outright purchases from the government as an SBR. It wouldn't count, not selling the existing holdings of the DOJ. And I just don't think that it is I know David Sachs just said they're going to look at it and make a recommendation, but I don't think it is an executive or legislative priority at this point. I think, what we should be looking at is movement at the state level on the SBR. I think states will probably lead. We have 15 states with proposed legislation for some semblance of an SBR. 2 bills have moved past committee. So there is progress to note there. And I do think that at some point this year, we will get, movement on the nation state level, not in the U.S., but elsewhere, because certainly they do not want to be left in the dust, these other nations, if the U.S. is seriously considering adding Bitcoin as a strategic reserve asset.
Yeah, I remember your chart kind of looking at all those states floating it, and kind of the idea of states leading the charge, maybe potentially front-running the federal government, which is a very interesting kind of thing to think through. But I guess we'll see how that all plays out as well. But I think, one of the other things that people really are, and we talk about this all the time, you come on, Sean, is kind of this split between Bitcoin and everything else. And I do want to bring up the chart of Ethereum just to kind of look at that and how hard it was hit, because that's one of those things where you look at maybe potential opportunities, and the longer term ETH BTC trade-off is just kind of crazy to think about. And I think it was even you saying that, hey, look, at some point you just got to look at that relative chart and say, there's an opportunity here regardless, because you don't know when it's going to turn around, but it's gotta, if you think about how bad it's been beaten down. So how do you kind of look at some of that, put it into perspective versus, Bitcoin's relatively all right hold up around the trade war? What does that say to you?
Yeah, I mean, I think ETH is still a little lost. And, our view has been that, it's going to be the macro environment. ETH has kind of graduated to this asset that's going to rely on traditional market participants to be the marginal buyer there. And I don't think you're going to get a sustained buy there outside of, buying blood like we saw the other day. If we don't start to see an environment in which things like small cap tech starts to outperform, that's an environment in which I think you'd see institutional capital perhaps rotate into ETH out of Bitcoin. But yeah, to your point, I mean, we got to the lowest level since, what's that?
It looks like 2020.
I'm looking at the chart right now. December 2020, I'm seeing, or perhaps January 2021.
Yeah, no, you're right.
Look, we're getting
dipped down.
We're getting pretty close to that. January. What is that? August 2019 low for ETH BTC, and I think if we were to get to that point, you'd probably have to just take a pretty big swing there, just for at least a mean reversion trade. Yeah. But look, all of the factors that contributed to us being, underweight ETH a year ago still remain. Nothing really has changed. I think maybe staking ETFs could be an interesting catalyst that is coming down the road. But if ETH gets a staking ETF, it's likely that Solana gets one shortly thereafter.
That has been my theory. That has been a little bit of it, as well as maybe some of, Pudgy Penguins can be put aside because of the way that they drop their token. But there does seem to be a lot of ETH native NFTs that have been seeing a resurgence when it comes to token airdrops. That's a meta that could swing back some attention back to ETH mainnet as well. I would put Coinage perhaps in that camp as well. We've seen some interesting traction for our NFTs as well as we rolled out dividends for holders, or distributions for holders, I should say rather. And so it is very interesting to think about some of that meta, Sean. But the other big
Zach,
one,
did you just drop a token launch hit right there?
We haven't said anything about tokens, Sean, but of course, obviously, as a member, you would be the first to know.
All right.
But yeah, don't hold my feet to the fire here, man. You're the guest today. We're just having a nice little chit chat. I'll let everyone speculate if they want to speculate on things like that. But look, we've been here building in the U.S. We've been here trying to do it in the U.S. the right way. We're a DAO co-op. Anyone can join a Coinage if they want to. And, the other thing that's interesting too, Sean, is we were just down in the at Plan B, the forum in El Salvador, to chat with Paulo. And this is another one that I think also we touched a little bit just now on stablecoins. The idea of what's happening here in the next 100 days, if you believe Senate Banking Chair Tim Scott, is that there could be some massive legislation that has been trying to get through for the last 2-3 years, I want to say, in terms of finally setting the rules around stablecoins. And we were just chatting with Paulo from Tether, the world's largest stablecoin, to get his take on kind of maybe potentially either A, what that looks like for them, but also B, different regulators around the world who have tried to lead the way and could potentially be instituting the same problematic vectors that had USDC run into their problems with Silicon Valley Bank. And I want to get your take on maybe what he told us around at least some of that, maybe potentially replicating the problems we saw with the DPEG with USDC in 23 around that. Here's what he told us about Mika. And obviously trade wars can kind of trigger some of this, but just want to play what he told us and then get your take on maybe some of the currency imbalances that could potentially spark some problems. Here's what he warned us about when it comes to that.
When our main competitor in the US almost died through Silicon Valley Bank for that same mistake, they are now making the same mistake in the EU. They applied to Mika and they are going to make the same mistake. I can tell you because in the next years, some small European banks that are the only ones that are onboarding crypto are going to fail, dragging down also the stable coins, dollar stable coins that are in decided to take this enormous risk. In 2022, Tether was able to redeem 20% of its reserves very quickly, among which $7 billion in 2 days. Imagine if a stablecoin gets 20% redemption very quickly. That would be $2 billion or euros. Then you go to the bank, you ask for $2 billion.
Yep.
and the bank will say, well, I have only 600 million. So the bank goes bankrupt because they cannot fulfill the requirement, and so their regulator will shut them down, and you as a stablecoin issuer will go under as well, and you will die.
And so an interesting warning from him around maybe potentially what we saw play out here in the US and USDC. Obviously, USDC didn't die, should be clear, but there was that DPEG as everyone was trying to figure out what the hell was going to happen with Silicon Valley Bank. And so what do you make of that, Sean, in terms of, obviously Trump can trigger a lot of different moves in currencies. It doesn't take much. So just kind of curious, your reaction.
Yeah, I mean, he's right from a tail risk perspective. I think what happened at Silicon Valley Bank could certainly happen again. I think if the 10-year were to go to 10% tomorrow, you probably, you might have, another bank run. I think domestically you'd run into a situation though where there's already precedent for a Fed facility like the BTFP where these banks would be able to post their underwater collateral at par and receive capital. So I think there are ways to get out of that, but broadly speaking, the tail risk that he cites is correct. It's not something I'm super concerned about, and I think it's something that stablecoin legislation can really help to help to clarify the risks and help to manage scenarios like the one that Paolo just painted.
Mm-hmm.
In terms of market price action around trade wars, I think if things were to really get really volatile and really take a dive, I think that you probably would see yields blow out, but then eventually and all these bank holdings, these bank balance sheets probably would be sitting on a lot of unrealized losses, but ultimately you'd probably get a pretty strong risk off move at the end of that, which would probably cure a lot of the ails that Paolo's concerned about.
Yeah. Well, one of the things too, I guess, just to finally come back to the point that we teased at the beginning, is kind of why some of these moves may be good for Bitcoin longer term. You just don't really know kind of how the chop and how the reaction is going to go over the next few months, and why, of course, as I said off the top, you still have that pretty massive $175,000 price target for Bitcoin. Did I get that right? I think that's right.
Yeah, that's correct.
Okay, good. I was going to say, Sean will definitely correct me if it's wrong. But one of the things that basically kind of came up when it comes to that was Jeff Parks. He put out this post, went kind of viral, but not too dissimilar from, I think, what you've also been saying when it comes to, look, dollar and yields matter most for kind of what happens to crypto next. And maybe just, if you could, Sean, explain like I'm 5, when it comes to the idea of Trump's plan in weakening the dollar and what he's trying to do and how it does boost maybe potentially the idea of Bitcoin once we get past all the chop.
Yeah. So, I mean, we talked a bit about this back in July, I think, or August with clients as the concept of an SBR started to surface and people were wondering, why in the world would we even contemplate putting Bitcoin on the U.S. balance sheet?
Mm-hmm.
And our view was that, given that Bitcoin is this great hedge against monetary debasement as well in a weak dollar regime, it's a great asset to have because the goal of the Trump administration, the stated goal, was to onshore manufacturing, which in order to do that, you need to make it economically viable for companies to manufacture goods here, which requires a weaker dollar. And so, broadly speaking, we knew that was the goal, and it aligned with an SBR. Fast forward to November, and Stephen Moran, he's the chair of Trump's Council of Economic Advisors. He published a paper on how he would go about reforming the global trading system to reduce America's trade deficit. And part of the strategy was, using tariffs as this bludgeoning tool, right? Because we have this amazing weapon, or depends on your perspective, we have this powerful weapon in the dollar. We can bring other nations to their knees, but because all of their debt is denominated in U.S. dollars, and so if we, enact tariffs and create this stronger dollar environment, a lot of these other countries start to hurt, and that obviously creates negotiating leverage. And then he details, the next step in that process would be this Plaza Accord-like agreement in which all of these powerful countries, you have like China, Japan, EU, US, they all sit down at the table and they're like, hey, the strong dollar is hurting us. We want to devalue the dollar. But in order to do that, we need you to offload a lot of your short-term debt and shift the maturity of your U.S. Treasury holdings to more longer dated treasuries. And this is something that isn't necessarily palatable for these countries without this negotiating leverage. And so that's kind of why you need both. And the end result of that is these countries buying our long-term debt, despite any kind of persistent fiscal deficit or wherever the yield might be, and a weaker dollar and a greater supply of short-term debt in the market. And that regime, broadly speaking, is very good for Bitcoin because you're creating this multipolar world, right, where the dollar is less central. It's still going to be the reserve currency of the world, but it's going to be on the margin less central to trade. And you're going to have this weak dollar environment, this implicit easy money policy. So I think that's a world in which Bitcoin and obviously gold will do well, but obviously the faster horse there is going to be Bitcoin. It should really benefit from that environment.
Well, it is interesting. Yeah. I think it's interesting because if you pair these ideas, right, and the idea of Trump v. the Fed and Trump v. interest rates, and interest rates suddenly being everyone has for the last few years under Biden been paying attention to interest rates, and now the idea of introducing some other tactics that could potentially alleviate maybe some of the pressure around simply focusing on inflation and interest rates, maybe potentially some policies that weren't even thought of under the prior administration. And I wonder if that changes anything too, because it was interesting to see, after it looked like we were setting up for a huge brawl between President Trump and Jay Powell again at the Fed, you get this headline where it's like Trump's, he's chill with whatever's going on with interest rates because he's got this whole other tactic and whole other tool. And so, I don't want to say that inflation doesn't matter and interest rates don't matter, but it does seem like what you're getting at is, look, there are some other ways that the Trump administration might be using these tools to impact the dollar, which clearly matters a shit ton for Bitcoin and crypto.
Well, if you follow the logic that I just walked through, he doesn't want to cut rates just yet. He thinks they need to go down ultimately, but if he's using the dollar as this, bludgeoning tool, he wants rates to stay high until he's ready for them to come down, right? So, also, just want to second your thoughts on Jeff's piece, Jeff from Bitwise. Definitely recommend you check out. I think they sent a memo around him and that. It was a very good write-up and details pretty much exactly what I just said.
Yeah, I mean, just looking at the dollar too here, it's like it's we've been waiting for it to kind of roll over for a little bit here. I don't know if you've seen enough yet to kind of see, and I guess that's the main point. The main point to take to kind of summarize everything that we talked through, Sean, is essentially it sounds like you're saying, look, we'll get there in the end. We're hearing the same thing from Arthur Hayes as well. We'll get there in the end, what the strategy plays out and what Trump's trying to do. It's become clearer and clearer. So probably, I don't know, maybe you're feeling even more confident than where we were in January about the overall year-end price target. But in the short term, just less clarity in terms of how long and how hard Trump wants to play it. Is that kind of the main takeaway?
Yeah, there's just a lot of uncertainty about the path, right? And we're in this headline-driven whipsaw price action type market. And that in and of itself drives away a lot of capital, a lot of momentum-based capital. It's tough to sustain a rally in that kind of environment. A lot of, I know you and I are fine holding Bitcoin through some volatility, but, a lot of crypto curious capital probably, doesn't want to, have their head on a swivel 24/7, even if they can get asymmetric returns. So it's just something we're going to have to, assess in real time and deal with. But I do think ultimately this resolves with Bitcoin and crypto moving.
Yeah, no, I wouldn't necessarily disagree with that at all. And I do think, too, in terms of kind of what we've seen play out is, a lot more of macro playing a larger and larger role in all of these things. And so we appreciate you coming on to kind of help explain and boil it down in a simplified way, because otherwise we're just swimming and watching kind of what's happening with crypto. And that by itself doesn't seem to be leading price action anymore. Sean, can't thank you enough for coming back on, man. Appreciate it, as always. If you're not yet subscribed to what Fundstrat's research is, definitely recommend checking that out and following Sean as well. Sean Farrell there, head of digital asset strategy at Fundstrat. Appreciate it, man.
Thanks, Zach. Always a pleasure.
And that'll do it. Maybe, who knows? Maybe we'll chat a little bit more, give an inside scoop on what we're planning to do here at Coinage. But for the time being, you can head to coinage.media to catch all the big headlines around the world of crypto and Web3, as well as co-own this project with us, with me, with Sean, with the co-founder of Netflix, with various other people in the crypto ecosystem. Got a lot more updates to come on the year, and you can stake with us as well. Half those rewards go back into the Coinage DAO, half go to our tech partners at Dike. You can learn more about that and everything else we mentioned at coinage.media. I'm Zach Usman signing off. We'll see you again soon.